All right, thanks for coming out today. Coaching call November 30th, 2022. Yeah, great day, really. We can see just right away on the daily that so you could see when we came up here with that double top, you see those doji turning points? It's like I made a sideways call because this thing could turn down and we could go short, but it's hard to ignore this recent bounce breakout fairness. So sideways gives you the ability to go in on both sides. And that doesn't mean intraday that you have to take both sides. It's just that you don't come in really with a strong bias one way or the other, and then therefore that affects your setups, right? So you could see here, told you turning point down, right? A little bit. This was not a sideways day. The next day I made a sideways call, but a sideways in the night got you in, and then with the momentum during the day, that's another factor on the weight. So this actually turned into a down day. Now you don't have to trade 24 hours a day. I don't trade the night sessions either, which were a lot of people are like, why don't you short that much? I'm like, guys, the turning points happen when I'm like 3, 5 in the morning. I used to do that, but I'm working out now. I'm getting healthy. I don't have to trade every day. And Corby was telling me he knows a guy that only trades on Fridays for 3 hours. And he's a consistently profitable trader. He's got another job. So whenever you do it or how much you do it, all you got to do is realize you just go into the discipline as if you were in a martial arts tournament fighting somebody. It's like, I'm not going to take unnecessary risks because I might get punched in the face. In fact, to help with my stress levels, because I put on risk every day and post on the channel, I actually took up MMA again. I'm 39. So I haven't done that stuff since I was in my early 20s when it wasn't MMA. It was just separate, different disciplines. So I did that on Monday for 3 hours and I felt amazing after the day. So it's like, I got to keep up with the fitness, the mind. So it's like, however you structure your trading sessions, it doesn't have to be, you could do this part-time, in other words, and still be professional. Just when you're on that screen and you do your analysis, you're professionally driven. Some of you that worked with me one-on-one have a good Excel sheet to keep track of your trades. I mean, it's a business. So if you really are serious about it and you just don't want to wait for the next bull run and buy a bunch of shit coins and hope they go up, but in the future, you actually can control your destiny. I mean, like if that strategy is great in a bull run, but is anybody making money with that strategy now? No, everyone's just holding. So this is a skill base. So this is really where you want to be, in addition to any investments you want to do, is you want to develop your skills. So that's why you're on this call, right? So the next day, right, we went slammed right down into it. I made another sideways call because we were at a high volume node, which I just got rid of. I wanted to show you that. But this is also sort of like a wide, not really a doji, but a harami or whatever it is. There's a fatter indecision day, which is also a signal for sideways up. So I made another sideways call because that allows me to take that double bottom, but I didn't know we were going to have this crazy day like this. I mean, who would have thought we were going to have a day that broke this whole structure? This is very bullish. This is very bullish. We broke above the 200 moving average with a multi-week bounce breakout pattern after a giant bounce breakout pattern. So, wow, I actually, when I was looking at Bitcoin today, not to change subjects too quick, we'll do Bitcoin. I didn't think it looked as attractive. That's another benefit of trading multiple markets, because I told Corby yesterday, I said, I'm having, I think maybe I have a limiting belief that maybe now that I'm focusing on 2 markets hardcore, I'm putting on risk in 2, I can't be as dedicated, because I come from a background where it's like, let's get super focused on one market and not spread our pain too thin. And he said, hey, if you have the discipline to add other markets, you have more options because not every chart is as attractive. Now, maybe that's not a good example for Bitcoin because Bitcoin did have a good day, but we'll get to that in a sec. Now, let's go on a lower time frame. Really quick. Okay, so sideways call. Right, we do our top-down analysis, fill out your sheet. Sideways call, right? No entry, no entry. All right, so that's the low of the day, right? So that's technically could be an entry. It's very aggressive. Just because it is the low of the day doesn't mean you have to take that. We're looking for wide double bottoms, right? Okay, this is at 1:15 in the morning. Okay, clearly, all right, we have a breakout attempt into pre-market resistance here, the weaker zone, right? And that is a entry, right? Because it's at the yellow zone, I would mark that with the yellow. if I was giving that as a signal, just to let you know that, hey, this is a more aggressive, like this has a lower probability of working out. Right. But even if I take a setup, right, then I know that, hey, this one has maybe around, because it stacks enough edge. And there's no way of really knowing this ahead of time. I'm just visualizing. If I stack a bunch of things and 8 out of 10 are on one side, okay, this has an 80% hit rate. I'm way more aggressive on the stay. Time frame analysis is bullish. We have 2 different time frames aligned. We just had a balanced breakout pattern. The bigger picture patterns reversed. Maybe there's a major zone. The price action and volume are there intraday. The other markets are turning ahead of time. Like everything, that's the day we're like, oh, wow, right? But when things aren't aligned, you don't have to take every trade, right? But you can. I mean, if this is for the European guys, this isn't 4:30 in the morning when I'm asleep, right? So I made a sideways call. So you put your entry in right now. You don't have to sit here and fade this on first test because it's in some super zone. It's nothing. The price now is giving you into that zone with the double top, right? Got you filled, right? And with the wide enough, this is wide enough stop. You're getting in at, let's say, 76 here. Now, I'm not saying take a 10-point stop, but you can if you just bet half size. I'm very conservative, but within risk model, right? You're outside the zone. If you can get your stop outside, or even bet if this thing popped up even more and you had a double top closer to here, which your stop up here, right? If you can get your stop into the next zone, that's going to give you an edge, right? But look, double top, sideways call, boom, right? Now, I don't have to get as a sideways. People say, why aren't you shorting? Well, I was asleep, but I can still draw a line here, show you where the entry was, and I feel really good about it. I'm waking up. Oh my God, I'm feeling great now. So if you make your call, you have to reward yourself for doing the call. Is the call right? Maybe you had to work that day and you couldn't scan, but then you go back and you back test like I'm doing. Try to imagine as the price is going along what you would have done, and then put in the orders, right? Right. But then you wake up. Okay, I'm sideways. This was a live entry. I marked it yellow. I said it's low probability, filled in real time. Now, as this was coming up, I'm thinking, this is probably a zone fade for a tradable action. Maybe I should go all out on this because this is a weak zone, weak reaction into VWAP. Why can't we get a bounce down and then this be the main zone? I'm visualizing this ahead of time. But who knows? Maybe it bounces up then. It says, okay, well, that's where the quad exit comes in. But I didn't wait. I didn't take off half. Once it broke down here, I said, discretionary. I said, okay, I'm off. This is probably going to stop me out. I moved the stop to break even. Right. So that was the first. So because this was the low probability trade, I marked it yellow. That gave me less guilt if it was wrong and people shadow trade me, because we don't encourage shadow trading. This is all about teaching people how to do a system. This is way more in depth than just hook my bot up to Matt's API and I shadow trade on your small account. Because if you have a couple $100, you're not going to be interested in the percent gains that I get. You probably want to just dump it into something and hope you get 100x. You know what I mean? But if you have like 50 grand to 100 grand to start or something, or even a 10 grand, you want to start off on, because I think you should at some point stop the paper trade, put on real money. I don't care if it's 500 grand, you have 500 to $1,000. Just know what it's like to feel and really do the system. Don't say, oh, it's $1,000, man. I didn't use a stop loss. It went down 5% and I held it and went back up and now it's 6% and call that a trade. You're not doing yourself a disservice by cheating. This is something you want to do and sit every day. It's like, well, how are you going to cash a check on every Friday? You have to really master that FOMO. I got a great example today. I missed the first entry on the green trade. I said, why didn't I get more aggressive? I got so pissed. I'll show you what I did. Right. So then this thing got stopped out. I moved the stop to break even. Now, once this broke down here, right, I initially had my limit order a point below this because I did a zone update, which would have got me filled. And then I'm thinking, well, if I get stopped out, you guys know I use an 8 to 10 point stop. I try to get 2 to 1, but lately I've been getting 1 to 1, and I've been having some sessions with Kobe. We got to go higher than this. I have to go higher. So what we talked about yesterday for a long time with my private with him was very helpful. I said, I do a lot of, he's like, your psychology is that you like Action Jackson. You're very good at reading the momentum intraday. What if you, because you're taking in more data, I don't have to put a resting order and go away. I can watch it. I said, but what if maybe on certain days, because this is a tougher environment, if I sat back, especially because, sometimes we have to wait for a while, and it feels like paint's drying on on a bottom building type thing. On a fade setups are psychologically harder than, let's say, you just take a momentum breakout and it just happens to work and you're already in profits right away. If you're trading momentum, which we don't advise many times, because many times the market's going sideways, which requires a fade setups because most of the time the markets are putting price agreement, not price rejection, because that's the main purpose of the market. Even on a fractal level that we trade on. 1 second. Okay. Now, so what was happening with my psychology is after I moved the zone, and you can see in the chart, it was like maybe 46. I moved it to this bullseye, right? Which I have to open up my chart, was at 44. Now, I said, okay, I teach a method. Many times this is going into initial resistance, which I marked green and then I marked blue to let it know it was the new zone for the day. And I said, Matt, just tell the guys that you're just going long, just press the button, go long, and then tell the guys a POI, like I jumped in early, and then be prepared if it comes back down. I said, but if it shoots down here again, I get stopped out. I don't want to take a super wide stop. If I get in here to 48, I got to take a wider than 10-point stop. It's going to get harder to get 2 to 1. I said, you know what? I'm not moving that. I'm okay with missing it. I was just having this dilemma. I said, okay, well, imagine the worst going to happen. You miss the greatest trade and it moves up. I said, that's when I posted my mantra, which is, I'm not in this to catch every move, be the hero. I'm in this to focus to the best of my ability. And the moments that I'm here, I'm present. I reflect optimally with an abundance mindset. Even when I miss it, it's very, very, it's like if you're into keeping a positive mindset, try day trading. You have to shift your state, because when I missed this and it moved up and that was my call, I got pissed. When this started to have a bounce breakout here, I said, should I tell them it's a non-system trade and take a little IBB and buy here with my momentum? I said, why am I doing that? I'm not going to do that. That's the old Matt. I don't do that. I'm okay with this just blasting up. I didn't, if God, so be it. I missed it. My resting order was here. With this more of approach, you can go to bed now, which I didn't because it was 10:45 in the morning. But I actually said, you know what? I don't need to sit here and hyper in on this if it moves up. I'm actually going to go do something. I went and I worked out. It was great. Okay. And I can still manage things or whatever remotely. You bring a little whatever next to you, but it's like everything's automated now. I'm not saying, hey, POI going to market, because that's, in certain times I can take in that data. But with a day like today, with the sideways call, is me watching this bottom building getting filtered out or stopped out, is my scrutiny going to help? It's not going to. What's really going to help, because it's location based. I literally gave it to you guys ahead of time. There it is. If it's a momentum based, a hybrid based location pullback type days, we're getting in on an up day, like the Bitcoin we had an up break. It was hard. If it just breaks out, there's certain things that I'll teach you 5 secrets to pre-market conditions that can lead to a trend. But since we don't even have a lot of trend days right now, I don't even want to even get into that, because then people start doing this bad habit thing. Like I just said, even if this worked out, this is not a great trade if you bought here on an IBB. That's why I don't teach that setup, because that setup has to be in a time frame aligned environment, bullish, not neutral, bullish, bearish. And it has to be at a zone that's major, super thick and blue, or thick. It has to be in a major zone, like higher time frame zone. This is a grid zone, intermediate time frame, but this isn't like we're at some giant, big picture, intermediate aligned zone that I would just automatically take. So there's no point in getting aggressive and taking an IBB intraday bounce breakout setup and buying here because I didn't jump in here. I said, that's it, I'm done. And if this thing whips back down, I get filled. Because it's so, what also helps me with these location-based trades is now I can measure my stop is much better. Instead of having, if this thing didn't work out and I went long here with that original order, which would have been fine. I just wanted to practice not being more active. I would have had the psychology. I would have had to prep in my mind. And it seemed like it was emotionally draining for me to do this again, because this is kind of an old style that I'm transitioning hybrid out of, especially on sideways days, where it's like, okay, if this got stopped at 8-point stop, then I would have had to press the button again at this one, because this is the real one. And do I have that energy right now? Because I'm growing it. I'm getting better. I'm gonna say, there may be days where I have that level of energy, but I also want to be in this for the long run. I said, you know what? That's it. I didn't press the button. I missed out. That was maybe incorrect. This would have been another nice trade, and then this would have been another one, right? But whatever. I kept the order in, filled, beautiful. Bam. Now this is, I didn't go to the gym here. I have to see that it's filled and put on some things. And okay, so I think it was like, here. I said, if I watch this and don't go exercise and go to the gym, I'm going to do my turning point, and then I'm going to aggressively, when it pops up here, take a little 10-point thing and do my old things where I'm reducing. My entries are really solid. Okay. I have to work on my exits now. So I said, I'm just going to go to the gym and fucking forget it. Not even if it blasts up, it does. I'm gonna, it doesn't mean I'm forget. The stop loss is there, the risk management there. What I'm saying is that my micromanagement on a sideways day is actually short-circuiting my ability to let my first profit run, because I've been actually exiting the last couple of times I took trades and posted them in channel a little too early. Could be a little public scrutiny, could be a little uncertainty. But really what we worked at is like, hey, when I'm super scanning I actually didn't even use the tick on this day. Okay. So I actually took that momentum down. Now, once it popped up and I saw that we were above zero here, that I started to use it. I said, okay, that's good. But what I didn't want to do is I was overusing that on days and actually going to market rather than using this resting order. Yes, I know that the low of the day is here, but I actually wouldn't put the order ahead of time. As it's coming down, I'm reading it, as it's popping it, then pressing POI, then doing a chart. And it's like, no, I'm going to give these orders ahead of time so they can put them in if they want. Not that I'm encouraging that, but you see the plan ahead of time. You see how we prep. So I said, I'm not going to micromanage this. And this is the day that Corby talks about. He's like, if you set this and forget it, he talks about in certain trades where he takes them and actually goes to bed. Now, those do have, if you've been doing this with the skill, obviously scanning it and you have the ability to do this to a certain level, your hit rate's going to get higher, right? But there are times when if you set it, forget it, and you come back, you are shocked. Okay. There was no scaling until I, got shocked at the seller's defense zone. This was my biggest financing target I hit. So I'm feeling pretty good today on this. This was all planned about yesterday. Relax, me not watching it, me not watching this pull, but this was just setting it, forgetting it, relaxing to a sideways call because it's location based, which truly, if you're really leaning on the main edge of this system, it is location. You could just see location, 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 because a lot of times if I'm looking at the tick to see if it's this and that, and I'm taking in a lot of data and I read that very well, but is it the main priority? Am I getting too focused on that? Look at today. I mean, I probably would have been more focused on reading the tick intraday than I would have just on focusing on these great locations. What really helps me is the acronym STEP, stop first, target, right? Then I enter, so stop, target, entry, right? And then you pull the trigger. So once the stop, target, entry there, it's like, well, if I'm getting great trade location, and I always talk about the middle to the back of the zone, which is the reason I took this. I'm not going to get super precision and take it to the back. I mean, that would be terrible. Here's the Y double bottom on the 60. Let's zoom out. Now I know it's not intraday, but who cares? I mean, you can just see that even on the Y double bottom on the 60 here that was wrong, in hindsight, still got you plenty of time to take profits and scale out and play defense on a day like this. Now that we're multiple legs down into a bigger resistance zone, you can see the action reaction up to the reversal of the mean is much higher now. And I had to do this all under the conditions of, we don't want to take in too much data. I only really conference with one other master trader. I've been a hunter of master traders over my years of learning, which is, it'll be 7 years hardcore that I quit my job in wealth management to do this. But I don't want to take in too much outside data. That's a mistake I made in the last bull run. Getting caught up in too many ideas, because like too many times traders will find a system with an edge because maybe many legs read it wrong. I'm not saying this is the only way to do it, but they don't stick with it long enough to actually see if it works. It's like they just go from one to the other, from the other to the one, and then it's like, well, now I take a 10% stop loss, and it's like, are you crazy? Or now on the daily, this thing's going to reverse. I had to hear that from another. This guy apparently works at a major bank, saying that this move was, when I was giving sideways up calls, pulling back here, it's like he said this move, this whole move's done, and I had to take in that extra data with really, there's absolutely no probability or information that I can see from a pure data perspective that would invalidate this bullish breakout yet. So why would I shift my time frame on the intermediate from neutral bullish or even bullish at this point to now this has to reverse? It's like, this is not prediction. We're just stacking probabilities here. There's an element of prediction because you start to see this enough, but it's like, it's really just about stacking enough probabilities and then thinking about your stop first. If I could simplify it, which it's more complicated than that because every day is different, but so yeah, this finally resolved. At least if this is sustainable through here and we can build structure, this is starting to turn into, taking out all this structure in one move. That's an institution. Taking out all that structure in one move. There's big players buying here. And another thing I did well today, because in a sheet that I actually I worked on with Ross with, is there's a trading journal that in this super sheet, or what do you call it? It has a quantitative side for your trades, which gives you an expectancy, very professional. I've been working on the sheet for years to improve it. It also has aspects of my system on the right, which says, hey, blah, blah, blah. And then it has a, psychology section. So it's like, what did you do well today? Well, I let my winners run today. I still have a runner. You know, I didn't short some exits are very hard. In my opinion, they're harder than entries because you have three chances, you know, there are multiple chances to fuck up. And there's a new psychology once you're in, it's different. It's like then it's like you want to cash in, you want to feel like a winner. And that's why that quad exit is the ultimate tool because it does satisfy that. But there's still elements of, you know, me and the human, they can short circuit things like, oh, I got out a little too soon here, 1-to-1, 2-to-1. Yeah, it saved me that time, but in a cumulative effect, is that move gonna help me overall? So yeah, um, that's the S&P analysis. Let's go to Bitcoin. Bitcoin, you know, that it was less exciting to me. You know, sideways. You know, this obviously closed higher than this day's lows, but this didn't engulf the whole thing, and it's not like it was a super. You know, we also had this moving average. There was resistance. It could resolve itself, right? Every time we hit a low, it was trending higher. Zero line reject here higher, and then we broke the zero line. So it's just this to me, this wasn't necessarily a confirmation. So I did not get as aggressive there, but we can see that this also broke structure. Let's go on a lower time frame. I think the reason I didn't get involved in this is that it just broke right up. Yeah, it's like if you didn't trade this real time, it's like this was hard. You know, the other day I made an up call. I'm psychologically prepared at that point to trade the trend. You know, when I say guys, it's like, you know, a PC or a pullback setup has to be early enough in the day. Now, if we go on this earlier enough time frame here, right now, oops, let me just pull out. Where were we? Let me go on a lower time frame. Not that, you know, you want to go this low, but this is the idea of a pullback. It's just once this breaks out, it's you know, the trend has to start, get on board the trend early, right? And not that we want to teach pullback. This was a sideways call, so this was the low of the day, and I just don't buy, right? Now you could say, hey, well, wouldn't you want to short the high of the day? Yeah, I mean, you can. I mean, it would have gave you a little bit something, but based on the strength of it, I just was more focused on. I thought the turning point in the ES was more of an obvious thing, to, you know, without this buying some pullback and hoping it goes up, because what I was seeing that I was advising a little bit against the pullback is that yes, this was a balanced breakout, but you know, when we got rejected from here and now we're holding here, remember we pulled back here again. It was a fractal balance breakout on an intermediate 1 week time frame that was now on first test confronting this giant balance breakout relative to this one on a slightly bigger picture time frame in the context of pulling back down here. So on that first test, it was like, you know, this was very aggressive for me to seeing this selling tail, say, okay, now we got to just buy pullbacks and scalp this. And I mean, look what happened if I say buy this, like you get mediocre, and then what are you going to sit through this? And no. So because at this point, after many hours, there is the momentum is dead. So you'd be betting on a pullback pattern, but why would I, you know, give that as a low risk signal when it's right into this zone here? So it's like we're not breaking the structure yet. It wasn't attractive to me, and that is one benefit of being able to trade other markets. Now you could say, oh, in hindsight, at this point in time, a little intraday 15-minute double bottom on this pre-market zone. Yeah, but it's that mediocre stuff. You know, it's like, why take that when the ES was giving you such a nice, that Y double bottom on that 60? It's like, let's not make it more complicated. Let's just make money here. It was hard enough psychologically to sit through not giving a shit, you know, taking a POI, buying a balanced breakout when I first missed it when it pulled back. And then, you know, to be actually put in a resting order and actually let go psychologically, and then actually be shocked and actually talked about this idea yesterday in terms of just not being as active. And then seeing it manifest today, this was a huge breakthrough for me. This was one of my best trades I've taken since I've opened PPT since September. So hopefully other people took that, or actually let me calm myself down. We don't want to encourage people to shadow trade. We're actually teaching the system. But if you had that same idea, you came in and you saw the logic and you took it with a small risk, because look at that 3944. I mean, you could get an 8-point stop and you're poking below this. I mean, that's what we really like. You know, taking it always at the top of the zone is always going to be psychologically a little bit more harder because you technically, if you get stopped out, you have to go in here again. It didn't, so you have to be okay. For me, it's like that activity stuff actually, which I do get in more. You say POI, POIN. I said, I'm gonna try actually not looking at the tick till after I'm in to engage the momentum. And I'm gonna put it there because the fade setup is always tough. And I think after I missed it on the first one, I looked, there was only like 500 stocks down on the day. Obviously, the momentum you were reading intraday wasn't giving you much. So it wasn't telling you anything. And it was really neutral. So it wasn't telling it. There was nothing in that indicator that was actually going to foretell that this thing was going to happen. It was just impossible to know that. There is no, you could say, oh, in hindsight, da da da. Yeah, I talked about the doji turning point, but I just don't know when these big guys are going to buy. I mean, why couldn't we get a couple of days like this? Could have easily went like that. Could have came down here, touched the yellow, and then that would have been a great buy because that's even a bigger invalidation point. The bigger the inflection point, the bigger the move you have. So even if this is just a 50-50 odds, small stop, next time it works, big move. That's why it's so important to control your risk to reward and think in terms of your risk and stop first. Step, stop, target. Think about your target, what you can get out of it. And in this case, for me, not over micromanaging the advanced decline and the AD line, but let's just give those a look just to show you what they look like on a pure trend day. You might see something hitting like plus 2,000 now. Yep, you see? Once you start getting above 2,000, that's the magic trend number. Now, don't think that just because it's not going up or it's not going up as much that it can't just trend all day. This thing could literally go down and sideways all day, and it will continue. It will still close at the high of the day. Now, obviously, we're closing soon. In principle, right? If it's pure trending like this, the odds are that the high of the day in a case of an uptrend will close in the last few hours, and that's why I held that runner because also, the idea is that if I hold this runner with such a bullish move, the pressure to re-enter tomorrow in case of a continuation or sometimes a chop sideways up into a reaction type trade, I don't have that pressure as much to re-enter now. Because I've already 3/4 taken off on the financing, which should be 50, but I said, hey, that's just a smack. I mean, when you get that type of move in the S&P, you got it. I'm taking profits. That was a big move. And hey, I came back surprised that the runner's going to keep going. Let's just this was a great day, wow, and I really planned that out. Talked to my coach, Kobe, visualized it. Before I woke up, I just visualized taking that zone over and over again and what I was going to risk on it and just saw myself doing it. And then that actually was sort of like, a pre-market confidence ritual is basically to visualize yourself, I haven't been hitting big winners. I said, well, what have I been doing right? Don't beat yourself up. I don't like the fact that I've been getting out financing at 10 points, 12 points, a little bit nervous, but the market's been tough and I've been taking mediocre trades based on the tick. I said, let me just take location based today, plan this out on bigger time frames, and then I won't be exhausted when the big move comes. Just be okay with missing it. And so what you can do to gain that confidence is, let's just say if you've been on a losing streak or you haven't been holding your runners or your financing as long as you'd like me, remember a time when you did, right? So do that, visualization, like, the greatest Olympic and sports athletes that separate themselves. It's like if they just miss a couple of jump shots, they're not going to just beat themselves up and they're like visualizing the next jump shot. They can't wait to take it when the opportunity's there. When the next opportunity's there, they feel confident to take it again. And to get that is not just the repetition of saying that, so it impresses my subconscious mind because we're all going to battle even when the skill's there. You have to get the skill. That's what I was going to say before. It's not just the psychology of the programming. The skill has to be there, but let's say the skill's there and you don't work on that undercurrent. That undercurrent will come out and eventually make you do something where you completely stop everything that you've been taught within your system, and you might just gamble a huge amount in some random channel with your boys. You know what I mean? Like, what the heck happened? I'm like, well, you shouldn't have, that's it. You just didn't, your subconscious came out and you were doing so well that it decided to actually make it exciting again because deep down, maybe you didn't feel worthy because of blah, 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 blah. And those are the things you got to work on. And you can work on a number of ways. You can have a performance statement, right? A performance statement is after you've had, because I've been visualizing that, hey, I can hold my runners for big targets. That's what I do on the right days. I have no problem holding my runners for bid. What that means is the way that we've defined it. It doesn't mean we don't take profit, but it's like I'm holding my finance to at least 2 to 1. It's like, and on certain days, I know I could hold it right through the VWAP rather than taking it off, moving my stop at 10 and then taking another at the VWAP and then holding goes up. It screws up the whole thing. And it's even though I'm rewarding myself emotionally and say, hey, my entry's been really good. I am making money, but well, let's do this better. All you got to do is just psychologically just not press it, just hold off, walk away, walk away and not micromanage when the time's right, and you will be shocked. So this is an example of how you could use this kind of ahead of time. Where are you going to put in the automatic orders on the fade setup? And then you go to bed, you go to work. Like if you were in Europe time and this is, approaching 10 p.m. and you get up at 4 or 5 in the morning, sometimes like I do, and you're tired, you saw that, okay, well, then you put in that limit order and you go to bed. Minimum, you have to have a stop loss. You don't, if you want to have an alert, once you're filled, and then you can, okay, then set your targets based on the momentum, whatever you want to do. But you could actually set everything up ahead of time. But there is an advantage in reading the momentum ahead of time. And once you see trending conditions and you break structure, you're like, whoa, and the internals confirm it, like we just saw. You don't have to you can hold your targets longer. But if you didn't feel comfortable, you can put everything in and say, hey, at least I got something out of this. But you could just see, right, now that we're holding at 2,000, before, during the entries at the pre-market that I had, and then the one I missed at green, and then it eventually was filled. I mean, this was two-sided. This was not giving us information. But once the momentum's there, it's like, well, this is just confirming price. Of course, we're going to get extreme readings. It would be really weird if this was like around 200 or 400 or even 600, and this wasn't even getting above 600, and we were seeing this. I'd be like, what, is that even working? Like I even said, like it has to be at plus 2,000 when I see this price action. So there's nothing here really so hardcore that I can't deduce from price, except on days when it's like a little wishy-washy. There's times when I only get in if I see a divergence at a mediocre zone, and then or the tick gives me an extreme or something like that. Like yesterday, I think there was a shitty trade that I took. But I was talking to Corby about it. He's like, hey, I said that, why didn't you wait for the wider visual double bottom? Which I said, well, this is one of the reasons I saw it. I said, hey, at the time I took it, let's just say it was yesterday. Let's see, what time of the morning was it? Maybe around 9 something or 10. There was like 600-700. There was like this many stocks up on the day. When it was coming down, I said, well, is that really going to break right now? For one reason on that zone, it was a zone, it was a sideways. It was basically the low of the intraday, which was aggressive, but it wasn't like, it was very similar context to today, except it was a leg lower now today, where it's like, that the lower zone is the real one you have to take. Do you have the psychology to take it both? There's one setup that I thought about that it's called a 2R setup, where it's like you place your stop loss. Let's say you take it at the yellow zone, at the low of the day, but yesterday's low is the real one at the initial support that you want to take on a sideways call or something. It's like you could put your entry at the stop of your, let's say your first trade as a stop loss, then you put your new, you get stopped out, your entry's at the exact price of that, and you get filled again on a new trade. It bounces back up, you make your RR, and that's how you can hit both. That to me is like, whoa. But psychologically, you have to be okay. I'm like, what if I get stopped out of both? I'm like, yeah, so what? You have to just visualize that and be okay with it. That's it. Just like I visualized today, not FOMOing in and taking that little BB setup. So okay, I'm okay with what just happened now happening when I missed it, because I know if I not chase overall, I'm going to be rewarded, like today, where it's like, look how awesome it feels when that location stuff works, when you really favor trade location over anything else. So
this is really key. This is really key. You said a lot of things, but to sum it up, reactionary trading is just amateur trading. It has some benefits in regards to feeling, because like you get more hyped up, and people typically start scalping because it's the easiest time frame to be basically instantly in something involved, because you don't have to predict the future. But all good trading happens removed, and that's basically what you said throughout your comments in the last 15 minutes. Is it's all pre-prep, because the market has this potential that it actually all the time plays out at, which is by the time the moves are coming, you are done. So 6.5 hours, nobody can focus that you're hitting the entry button exactly by the millisecond correct for, let's say, whatever, 3 to 5 trades. Or if you trade multiple markets, there might be 20 trades. So you need to be extremely conservative of how to be able to carry that focus. But if you have as much as you can, you mentioned visualization, you mentioned prepping for the day, you mentioned conditioning, confidence, you mentioned choices, having different markets so you don't feel forced extracting it out of maybe an instrument that's not ideal, even so the whole market is active and moving. Um, and that's what's really done. People just come and feel like, okay, now I'm at work, now I'm doing something. But you see me very quiet on these days, like today when lots of happening, because all I do is just execution. I don't think anymore. I have everything pre-prepped in regards to, and that's why I mentioned it twice. I said on the weekend, okay, I'll expect mid of the week. Then I said yesterday, okay, the two turkey days are over where everybody is snoozing. Now let's get to action, most likely tomorrow. We had a few setups of news, of points of interest in regards to time, and the plays are set. We can isolate prior what in what sector has relative strength or weakness. What is to be expected in regards to direction? Obviously, we'll have this whole market into a slight bullish connotation. So we're looking for the longs, not the shorts. And this elimination process, what I like to call it, which is you eliminate reactionary behavior. You eliminate that you're looking for something to happen. What you're doing is you are prepped, knowing that if this, and this scenario is happening and the market is lining up with your anticipated setups, and then and only then you will act. Not sure whether I already mentioned this once. There was this guy, I'm not sure whether it's in the market wizards, but I most likely, I think you'll find that story there where this guy extracted on a daily basis 60K in the late 70s in the bonds market. And this guy who was a story writer was observing him. And after half a month, after a couple of weeks, he said to the guy, okay, I'm in awe. I don't understand. What's the secret? I mean, like, no matter what kind of day it is, no matter what's happening, is you walk in always home with 60K. Why not sometimes a losing day? Why not sometimes more? How can you manage to be so consistent? And the guy said, oh, it's pretty easy. I know what I'm doing, of what I'm looking for. And I have that respect for the market that I know that with each trade, I risk the benefits of me and my family that I love. I cannot screw up because if I screw up, we don't have anything to eat. And then I only follow one rule. If the trade does not exactly land right in front of my feet, that all I have to do is pick it up. If it would be a trade where I would either have to make a step to the left or a step to the right, I wouldn't take it. I will not take it. It has to be right in front of my feet. Now, when I heard this, I didn't really understand the whole connotation of this 25 years ago, but I knew that I heard something significant. I knew that this was real and that I need to figure out what this is. And it's exactly what Matthew was just talking about, which is you are prepped and you're in an elimination process. You're like, okay, all I need to do is when this move is coming, and I don't know when it is and if it's today and how it is, but when it's there, I don't want to screw this up with a too big or too small stop, too early financing or too late financing, getting the runner out, even so from the larger time frames. I have a probability that this might turn into a daily, weekly, monthly trading. So I took it on a 60-minute chart. And this top-down approach is extremely difficult because the market always lures you into these smaller time frames. So Matthew and I had a coaching session yesterday where, especially in this environment where this isn't a regular, easy, swingity-diggity uptrend in any of the markets. This is a really tricky, hard to get in, no matter which leg and what reload. Creepy, weird, and then these exhaustion moves when the big boys just step in and they don't care about the smaller time frames, and they just eat up size, and they don't care that price goes just along with it. They need to get positioned because they know as soon as it moves, everybody is in. And you don't want to trade breakouts. You don't want to. All you want to do in these moves is just take your profits, because it's high risk when these moves are happening, because the moves themselves aren't clean either, as Matthew just showed on Bitcoin. So the only chance that you have, if you're not an institutional trader who just blows this with size, if you want to coattail ride these things, is what we're doing, which is, even so we already had a 16-hour workday yesterday, we'll get together and we'll make these plans where, okay, let's remove from micro and go to macro. Where's the leverage? What are the time cycles? When this is likely to happen? And being prepped with clearly only taking the trade that lands before your feet, and then being very sensible about it, on how to maneuver it, because everybody gets excited. You don't want to get excited, because as soon as you're excited, you have a lot of data flow, you see a data overflow, you do something reactionary that you don't want to be doing. So all these things are planned out, and the main work is actually when we're not present in the room every second, but in the later hours of the day, just prep all this stuff, rehearse the stuff, write the scenarios down, and prep ourselves for the next open. And this is why I was later in the day when I was posting so exciting, because you wait for these things for days. And if it's then turning out, if you have like this little game plan and things work, it's actually more exciting than the money coming in, because the ego gets very much satisfied in as much as we are suppressing this all the time. These releases of energies of, okay, I did my homework, and then the market actually really followed suit. That's why you come home from a trading day very satisfied, and you can hear the excitement in Matthew's statements today, because that's just, it's exhilarating to do the right thing, because since it's counterintuitive, it is so difficult to do the right thing, because you're not playing with this, you're just setting up a trap. And if the market is willing to walk that one way that you figured out, it is a very satisfying game to be playing, because you're not in this neurosis of finding yourself in a reactionary situation where you in real time think about dollars or ticks and would have to do something, but instead have all your plans pre-worked and ran in your mind, that you just easily browse through this.
Yeah, I mean, I just want to touch upon something you said. It's like, it just reminded me yesterday when I gave a POI and then I instantly got out, right? And then the tick shifted a momentum thing, right? It gave me emotional comfort. I got in again, and all it did was get me a higher price. It didn't change anything. And to sit back and just have this trust on this top-down approach, it's a trust thing. There's sometimes less is more, and I think that's the lesson I took away with today. And it saved emotional capital. I was not overusing these smaller time frame or indicators like the tick like yesterday, and it saves my energy. It's, you know, especially on a sideways day, the tick is really, any extreme is just almost it's not really confirming the momentum, you know, and then the momentum today is really just, it's so obvious in the price action and volume, you know, you would just expect that the tick would be skewed above zero and that this would be at 2000 plus, and it's not really giving us more information than we need here. So I actually was kind of shocked. I was like, wow, this is, it's I was able to enter this, and on the first trade I forgot, it's like I didn't, you know, I think the first trade might have even been before the market open, I can't remember, but it was like I wasn't looking at the internals, you know, until this momentum started. So I was like, wow, I it hit me, because it's like, you know, this is something, this is a tool that I wasn't using for Bitcoin. So it's like, you know, this is the cool hot thing, right? So there's a little bit of me maybe possibly overusing this, even though I have a background in this, you know, prior to working with Corby, this was the ES and this methodology. Not that it's like, oh, you have to use internals. Primarily, that's what I was focusing on. But yeah, if I could remove anything from this strategy, it would be every indicator. Really, just an order of importance, and you could still trade. And if used right, this will just help you with your hit rate. But if used incorrectly, it could really, really mess you up, because then this becomes your god. And since all indicators are really just taking price and doing something with it, it's not really telling you more than just being able to decipher some things about price action. So I'm going to check the chat right now and see. No trading questions. I know, Ross, you posted a gold chart. I mean, if you don't have any questions, that's fine. We don't have to go any over than this. I mean, but yeah, Ross, you posted a gold chart. I didn't know if that was a trade or if you planned that out. It seems like that was something that you might have planned out and it worked out and you wanted to share it or talk about it. But yeah, if you want, you can unmute.
You have like one really basic question, so maybe it's just a recap for the other guys. But sometimes you guys are relating to the terminology that the time frames are aligned, you know, or are lining up. Can you sort of explain it with
Sure.
with a example?
Yeah.
What do you mean with that terminology?
Okay.
And how is the connection between the time frames?
Sure. So and I think we might say it in a different way, but when I'm talking about time frame alignment, so I was like, if I'm looking at the last, let's just say the last oops, too much of that. Say at this point in time, you know, the last few days, you know, it's just, we're consolidating. I'm short term the last few days, 1 to 4 days, one if it's a really big day. I'm neutral in the sense of I'm not leaning on one side. I don't really know who's in control on that time frame. But you know, you can imagine covering all the data except this when I'm talking about that. We're just isolating this data, this little rectangle. But you know, if I zoom out, and now if we just isolate, let's just say this data from here to here, you can see that, you know, there's a big pattern here, right? We formed a balance here, right? We broke out, we attempted to break out, right? We failed, we came back into the balance, we bounced again, and then we formed a new balance. So almost like two balances. Bounce here. Bounce there, and now we broke up, right? So on this time frame, the last, let's say 2 weeks, 3 weeks, there's a bounce breakout pattern, right? So that's bullish. So the intermediate time frame on this S&P chart is bullish, and even when this broke down, I'm still neutral, right? This right here is the low of this balance, and plus there's mini wicks here. It hasn't been invalidated. Sure, it could you know, touch this, you know, at some point, but it's like I'm looking at the structure too. I'm not going to say it has to go here. That's one thing I'm looking at, that it could get pulled here, but I'm also looking at that we're at, if I put this back in here, let's see, I would have to, go to object tree, but there's a big VPOC here. If you see the horizontal volume, let me go to the object tree. Yeah, okay. You can see here, and I actually do this. There we go. The VPOC, right? This was beautiful because we had this, and this is one thing too we were talking about. And I said, sometimes I'm having trouble with these sideways down things. I said, he said, see the doji double turning point, yeah, double top. And he said sideways is a bad call because it's hard to just invalidate this. We have to be able. What if this thing breaks down and there's an action? There's this long is still here too. So this did end up turning into a down day, and the momentum came down hard, but we came right down into some about a week-long support VPOC that on a larger time frame, right? Just zoomed out, this was almost an inflection point where this VPOC that we built a supply demand zone around. Look right here, it came down here, broke down, right? And then launched up, and then here broke up, and then here came up resistance, broke up, so it's inflecting back and forth. So it's like, wow, this zoomed out, launched here, big candles around it. This is, why can't this at least the following day have a sideways to sideways up, since the neutral bullish time frame could be taking the short term was neutral. So it's not like I'm super leaning on one side, but I'm certainly aware that the intermediate time frame has been bullish. Look at these big candlesticks breaking patterns. And of course, the big picture, right, is still downtrend down, bearish. But am I really at a big picture zone yet? Really, this is still the dominant leg up. I mean, we're not at this big swing here, up here, or whatever. Here's the next big high volume node, right? So once we get there, then I'll shift. I'll put, then it could get bearish, right? It could reverse, go sideways down for a little bit, whatever. But right here, we're right at that in the context of a potential leg continuation thing here. And it's like, it's hard to say when you see that dirty turning point, isn't it going to break up? It's like, yeah, it could, but it's like, we really don't know. Why couldn't it have just bounced there another day or two and then broke up? So regardless, the sideways call got you in. And maybe if you were too aggressive and you made an up call, maybe you would have bought a breakout, or you would have saw this, you were so antsy or up, so I wasn't, it's very rare that it's up or down, because that just implies that this thing might just take off right away. And it's like, it's hard to predict that, right? There's things you can look for ahead of time, right? Volatility contraction, which we saw here, and also a mature balance. It's not like this was 1 or 2 days after we broke out. This was, this was a couple of weeks, and so this was November 11th.
Another way that these terminologies are used in regards to time frame alignment is more likely than not, you will have, if you make an analysis to time frames, let's say you take 4 time frames, monthly, weekly, daily, and hourlies, then you will find that the monthlies is trending down, the weeklies is trending up, the dailies is sideways, and the 60 minutes is trending down. And you're like, what do I trade? So where the interesting point starts is there is times like the ones right now where when the larger time frames roll over, when basically from a larger time frame down, you get into a larger time frame to sideways. And then you see on the weekly, we're already from a sideways to a sideways up. And then you have a daily setup like today, where you have a little doji uncertainty yesterday, and you have a possible long entry as a continuation 4th leg of these 3 boxes that you see on the chart there right now. Then you have a time frame alignment, meaning you bullish everywhere. And it's of interest to you because you typically wouldn't get a move like the one that we had today, because large players are simply not interested if it's for them not also an interesting point. But it is. If you look at that chart, you also see that the price has gone through the 200 moving average. That's always significant throughout all the time frames. And So seeing your trading through from a time perspective through time frames can be very much clarifying what you're trading or not. That doesn't mean that if you have a daily swing trade and weekly is against you or monthly is against you, you shouldn't take it. But inflection points are identified, meaning at the times when it stacks all into your favor, yeah, then you should definitely be present. So, for example, I traded today triple size because we had a very rare synchronicity. We had that time synchronicity that is Thanksgiving, which is the statistical points that, as I said, this Monday, Tuesday is typically nothing is going on. And then we have a picture of continuation of what was going on before. So if you look at that daily chart here, and today is Wednesday, then you had a Tuesday, Monday prior, where basically there was just fairly little participation. You see this if you go downwards and you look into the volume charts. And before Thanksgiving, there was enthusiasm. So we had basically an attempt for the fourth leg that got stopped at a double top, and then that uncertainty bar on Friday, right at the double top underneath the 200 moving average. But the consensus, as I said, if you know the statistics about these unusuals like holidays, this falls into that higher probability. Then you have setup probabilities, which is that what all the daily edges that Matthew from Deepak to last week's support to the bigger picture. If you now would wrap up to weekly, then on weekly this double bottom that you see below the near the 3600 levels, 650 levels, 3650 levels, is just a smaller double bottom. So this is the first real situations for the weeklies. And then on the monthlies, you see a similar picture of a bullish thing. So now I have a time frame relationship that I also get edge. And then what's not shown is that we had time cycle edges. Something that I do where I just look at time things. If I have an edge and an edge and an edge and an edge stacking on top of each other, and these time frame stacks are really rare in occurrence, you have to step in. This is why I was so vehemently pushing this on the weekend, even though it was a holiday weekend and we said we wouldn't be posting that much. I was like, okay, I'm working here and I'm prepping and I see mid next week something happening. And then yesterday again, we talking, I don't want to come in and into the room and say, okay, today I tried triple size and I will be very aggressive. That's not helping anybody because I basically just put fuel in that uncertainty bar. Like, okay, where do I enter and what do I do? And that's not helping. But what's helpful is me pointing out, this was that talk that I had yesterday where I said, well, we'll have less posts now because I don't want to distract too much any longer with whatever news feeds and what's going on in the crypto world. And because this is, for me, mainly just entertainment. Yes, I want to know. I post these videos of good sources because I want to know what's going on and how others think, but not to have me confirmed in the way of what I'm doing. I'm doing my thing totally isolated. I listen to nobody. I have no clue or whatever what the Fed does and what they should do and what he doesn't. I just observe this as a sidekick because at the beginning of my career 30 years ago, everybody just had CNN on all day long. And that's crazy. That's like we're going back to Matthew's smart comment when he spoke about emotional currency. That's a high stakes issue for every trader is emotional currency. You're just a little bit down. You foul up on a Monday morning at the open and you have 2 or 3 losers in a row. This sets the tone for the whole week. And vice versa. You have a trade like what happened today where while I'm loading up yesterday, so I catch into these moves like today, and then one day I barely did anything. I didn't short this thing. I was not. You saw me on one day. I was just an observer because I kept my emotional currency ready for today. Placed my trades mainly yesterday, did a few reloads today, but and was aware of when to focus. So your question basically has a bigger underlining, which is you want to look through the market from various sides, and then just like you would stack your odds within a time frame variant to say, okay, some people look at 4 hours, some people look at 2 days charts, some people look at 2-week charts. It doesn't matter what you're looking at, but you want to know, you want to stack your interesting points between these time frames. For example, you don't want to be a scalper today when you know that that this is a big day for weeklies and monthlies as well, and they care nothing about what the intraday players are doing. They just bite right through this. They don't look at a 5 or 15-minute chart. That's none of their concern. They decide this is a day where we are players, and then they cost average into this thing at the different time zones of opening doldrums and afternoon session. And that's it, because they don't have these luxuries that they need to look. They don't look at the tape or stuff like this, like a scalper would. And that same principle of stacking through time frames, you would be stacking through what Matthew does a lot is through fractal zones, whereas support from a price perspective. I trade more a time perspective. And when you then have these confluence points where there's multiple trading instruments, multiple time points of interest, like for example these reversal points and whatever, or a news item that basically gives that last push to shove something into gear, and stack these things to know when to participate. And then again, it's more like an elimination process than looking for something, because you will always find something if you're looking for something. So it works more like the daily call, where you say, what's likely not to happen? And that automatically will lead you to the point of, okay, if it's not happening here, and if it's not happening here, and if it's not happening here, at some point you're left with, oh, I guess that it's most likely happening here. So the next thing, since we had a few news on the board today, you can say, well, most likely this resolves when all this is over, right? Because then the picture is clear, that's nothing in the way. Well, so you can determine more closely which session you're present, because if you sit there for hours with pre-market or whatever, me trading 24/7, you have to really gear towards when is it cool to have your meal, or when is it cool to go for a 10-minute walk, or and then what's a good time where you're really focused, where you're balanced, where you're undisturbed, and then participate. So talking through the timeframes is nothing else than to say we're looking at different timeframes, finding out where the interesting edges in these timeframes are, then looking for correlations. So obviously, the higher the time frame, the more significant. Meaning the larger players are in the larger timeframes, and they're pushing the large volumes. So therefore, you want to be on their side. You not necessarily want to trade against the big guys. That doesn't mean you cannot take a 60 or a daily trade just because we are monthly shorts. That's not what I'm saying. But obviously, it's pretty nice if you're trading in that direction from the largest participating player, if you want runners that you take a year later out. Did that answer your question?
Yes, thank you.
Yeah, great points. you know, I mean, now the short term clearly is resolved to the upside. You know, we have time frame alignment. You don't need to have, you know, there's really infinite time frames. It just, it really depends on how you look at it. If you look at a short and intermediate and a big picture, which is pretty good for an income producing or day trader to get in on that entry point to stack that. You don't need to have the big picture also in alignment. You know, the time frame alignment is just going to give us more of an edge on the long side now. So rather than being sideways, you know, I'm not saying that tomorrow we have to have another big day, most likely consolidate. But I mean, now that we broke this, this is a line now. This is most likely we will magnetize to the next area of high volume. And regarding just look at these high volumes. It's like big high volume node, big move, high volume node, big move, high volume node, big move, and the bigger the node, the bigger the move, and this node is bigger than that node. So maybe this will resolve or consolidate. And why can't we have another leg and test the swing high up here? So this just goes to show trusting the system, trusting these principles, because we're stacking a probability rather than trying to make a prediction. I am doing so much better now that I'm removing all this extra data and other people's opinion, because I was highly emotionally distraught that an expert thought this was going to go down on me, that this thing was that this whole move was now going to be invalidated. And it just goes to show that there really is no experts in this game. There is no, unless you're pulling a scam at the $1 billion level. Everyone has access to the same chart, and the only thing you can extract from these is principles, which are really just multiple truthful statements that can give you an idea of what to do in an uncertain environment. This was an important day for hopefully not just me but other people as well, because it's an interesting time to trade right now, because I could easily get distracted by what's going on in the world and lead that to affect every decision, and I won't be able to make a decision. I will just be too exhausted. So this just reminds the purity of the data to eliminate unnecessary data points is super important to just having the ability as a human being to make a decision and execute. So
That was a point that I made before, where we had this long talk where we decided that we are reducing data stream, because obviously if you have a channel and you have customers and there is a temptation to show off. There's a temptation to feel that there's an urge to post something all the time, so it doesn't look like we're lazy or not providing anything. But what it really comes down to is if every of our posts is a meaningful one and a useful one for you guys, that's the only thing that matters. Just to have chatter and noise and everybody, we gladly share all our sources of whatever our most favorable news sources or daily calendars or whatever. If there's a desire for something like this, just let me know, and I'll write these sequences down and I'll share that stuff. But you probably all already have this in place. Your favorite news channel, your favorite whatever it is. But what you need from us, most stuff that you cannot get anywhere else. And then also in that density that it's not overwhelming, but that you like, okay, if you want confidence, and then it's entries and exits. If it's education, then that's why we made all these different labels of that you right away can identify. Oh, no, doesn't interest me. This is precious metals. Probably go home with your BS. I'm more interested in Bitcoin and ES trading. So anything that you want to contribute of how you want this categorized, or what's for you trading missing, or if you disagree with my statement that it rather is better to have less posts versus a continuous stream of information, just let us know. It doesn't. I don't have to be right with this, but I in my level of trading that I'm doing right now, I want as least amount of distractions and as self-directed as possible of my trading. Just like Matthew said, right? It's like I cannot afford other people's opinions. I don't care at all about anybody's opinion. And that's not an arrogant statement, that's just a training statement. So would I have loved at the point where my training was wobbly and less skilled to have a room like the ones that you're enjoying? Absolutely. Because I know that I'm not bombarded with whatever people selling me something and shadow training and all that garbage. But you're getting principles here and real-time entries and exits that are solid for confidence building. But overall, the main goal is data reduction. You want at least the least amount. That's why I warned Matthew yesterday and said, don't look tomorrow for the tick and twin and all that 5 minute stuff, because that'll be the move, and that's the only thing that's important. To focus on the larger picture. And we both agreed that it wasn't a waste of our time that we regrouped and made an attack plan for the next day. Even so, we were both totally exhausted, because especially for Matthews on the East Coast, I'm training from LA on the Pacific side. It's like we're having these calls at 2 or 3 in the morning at his time and at midnight at my time. And so it's like these things are, you have to be very diligent. When is it necessary and when is it a good time to have these conversations to not kill your partner on the last few hours of sleep that he has left. So that's why we thought we'll trim and make this a little skinnier. And on the other hand, basically try to really focus on valuable data points that hopefully are useful in your training arsenal and in your training day, because it is helpful if you know that whatever somebody with a hit rate of 80 or 90% has an entry right after you just had an entry, and that now comes the training boost of that you feel like, oh, okay, I'm in the right trade here. I'll wait a little bit longer maybe for financing. That's basically that goal of how we have this set up right now. I don't want to tickle or tease anybody with my entries into an active state. That's why I have stopped putting arrows. That's why I just, everybody who's in the room knows when I post something, that's basically that's an action point. I did something and that's why I posted. But I don't try to steer too much around to have scarcity kick in or any other low frequency energies or stirring up emotions. And you've all been very polite and kind and quiet to not disturb, which is a high value too. These chat rooms where there's all the time just like everybody has emotions and everybody's just sharing what their girlfriends do, then that's not helpful for training. But on the other hand, you should really take advantage of guiding and steering this whole ship into the direction of your needs. And you will never find any kind of fault from our side of some people are timid because they feel like, oh, this is maybe a stupid question. So the principle is there is no such thing. And I encourage to give us the homework, give us the work. We'll make an extra effort to shape this into the big cream that hopefully is providing for the cherry on top of the cake for you.
Yeah, I mean, you touched upon a great point. I mean, it is really about energy management. And, guys, when we work together, it doesn't have to be on Friday. I mean, let's say someone wants to get ready to trade a market and, I have some time or whatever, DM me. I can do exactly what Kobe did for me, for you guys before you trade. Because to have that prep with someone to plan that out, because this was a day where I used a limit order, and that is part of the strategy. But I'm always, when I say POI, there is no limit order. I've been going to market every time, and it was just a different way to trade today. The ego likes to think that it's because I'm there and I get to read one more little tick, I can finesse it a little bit more. But this just goes to show that it's not about satisfying the ego. It's about doing what's uncomfortable. This was uncomfortable for me. This was uncomfortable to go against my style. I didn't like to hear to change the style. I thought, hey, don't they want the action? This is how I do it. I had to go into the awareness of, I said, let me do this, but how can I do this better? This is making sense. This is making sense. This helped me hold the runner more. This helped me get a better entry. This helped me not get another data point, which actually helped me, which actually got me a worse entry by a half a tick or whatever. And actually, this was the relaxing way to trade. This was the type of thing that we talked about a long time ago. You're like, your best trend day is going to be when you come back with the order already in, and you're shocked. Oh, then not watching it in real time, not getting the better trade with location, anticipatory planning out, but then buying something a breakout, because you missed it at a way higher price. Because you could step away and come back and see a giant move and say, now what? It went up X amount of points. It's like, we really didn't know this was going to be the big day. It's like, why have bad trade location? So trade the plan, plan the trade, and trade the plan. Seems to be the motto and the way that I'm going to be doing that. So I'll be doing that more. Yeah, Thomas says, yeah, thank you. Yeah, as you can see, it's a more relaxing way to trade when you can remove some data. And it was actually seamless for me. It was almost like I was programmed not even to have the internals out. It was just, it was pretty awesome to see that. And yeah, I'm just going to do more of this higher time frame type stuff. It's harder to do. It's not, I mean, it's easier to, not that there's not a skill to reading a lower time frame type momentum and seeing these types of things and reading the tick right and all that. But the real art of this, to the next level that where I'm going, is being more of a master of these bigger turning points that Kobe's helping me identify. And then it's the psychology of it too. It's hard to be more patient, because Kobe said something last night. He said, hey, it's a lot easier to predict what's going to happen in 10 minutes than it is to predict what's going to happen in a couple of days. And that's why I was like, wow, he's working on the weekend. There's something, what is going on here? This is not for any reason, for no reason. And you could see that was big picture planning right there. That was a way higher time frame stuff to get excited on the weekend before this. So thanks for helping me out, because I think this was a breakthrough day for me. So thanks a lot. And hopefully it was for you guys too, getting to see this, some of these ideas live. Yeah, Thomas says, yeah, thank you, well done. Yeah, okay, well, that's it for me. If Corby, if you want to have the last word here, or if anyone has a question, floor is yours.
No last words. Last word is keep at it. One thing that's really always talked about is this is a long haul. This is a marathon. This takes a long time to master and do. But it's awesome. Let me tell you, I could have not ever thought that my life that I had completely seen in a very different way manifesting more like I thought I'd do something creative or make music or be a chef or all these other things that I did before and trained for. And I am stoked. I really am stoked. And maybe you saw this video that I posted from this writer who was asked from the Weltschirm guy, so how, give us some wisdom about what you want to give to your kids into the future, where we're facing difficult times on the planet. And he said, well, the only thing that's important is help them to find out who they are and what they're really interested in. And it doesn't matter what it is, the more awkward, the better the edge. And he said, and it doesn't matter whether they get successful or not, because this, that, or the other, if they go in the morning at it of what they're passionate about, they'll be happy. And yeah, maybe success follows suit, which often does when you're very passionate about something, because you work a little harder than something 9 to 5 that you don't like that much, or not. And that should be the determining factor whether you should do this or not? So if you do this for the money, or if you do this for the whatever else, then don't do it, because this is really hard, takes really long. But if this is fun for you now, if you just like, oh, this is great, right? This is just, then enjoy this ride. It will never get boring. It has plenty of abundance, and it's just great. I mean, I really love to be a trainer. I do nothing else. I mean, I spend time with my 4-year-old kid, and I love my wife, and I go for a good dinner someplace. But I couldn't see myself doing anything else, and I'm very grateful that you spending your time and your money and your focus and joining us on that journey. I think I'm speaking for Matteo as well, that he's also absolutely passionate about his profession, and we will do our utmost best to bring the hard labor that we gave this endeavor to hopefully cut your learning curve a little bit shorter. But it will still be a lengthy, torturous thing to be doing, and I'm really happy that we have you guys, because you want to share your joys. Otherwise, there aren't any joys. I get up, and the first thing that I do is come and see what happened in the channel, and share my work. So thanks for all being there, and wish you a great journey of training success.
Thank you guys for coming out. Thank you, Kobe, so much. And guys, we'll be in the room. You know where to find us. Blue Red, we'll see you there. Take care. Have a great one. Bye now.